Let's talk some tips and tricks, and in particular, when to be riskier as a day trader. Now, yes, trading as a whole, whether that's day trading, swing trading, or even investing, has risks. You could lose money. But there are some certain circumstances where it makes sense to just be a little riskier, take on some extra risk, which isn't actually extra risk, which I'll explain, but it can feel like, oh, extra risk. It can feel really risky. But again, feelings are not reality. We want math, we want data, we want probabilities to be our reality, not feelings. So yes, these circumstances can feel risky, but they're not. I'll explain why. And then also, I'm gonna use some of my real personal results I have a playlist, and on that playlist, I record myself trading. So I'm gonna take one of those snippets and show you exactly what I mean. Because I get it, I'm not a big fan of people lecturing me in theory. Well, I read in a book once and the author said this is how it's supposed to happen. I think, no. I'm gonna show you some of this. So yes, I will set context up here, but then I wanna show you everything I talk about in a real world practical setting. Before we get to all of that though, hey, check out the t-shirts, claytrader.com/gear. We got sizes for everybody, so definitely check those out if you wanna help support the channel. So what I wanna set up here before we show the first part of the trade is that I just made a trade on Facebook and I was shorting it, meaning for those that are beginners, I wanted to see the price go down. So on Facebook here, that was the trade. I wanted to see the price go down, and that is again known as shorting the stock, being short. But when prices go down, that means I would make money. So let's go to the screen and you can watch the first part of this trade. Okay, watching three in there at 345.25. Now let's see if this thing wants to continue on down. Very, very nice 5-minute looking chart right now. So there's the 5-minute. Now it's just a question of, does this thing want to roll back over? That is the question. I suppose another question is, would I want to add to it? If it comes down to, we'll call it 345. This is a good looking setup. This is a good looking setup. The one thing that's got me a little worried is it is Facebook, so you know that there's probably people out there that are, hey, it's Facebook, it's down, let me buy. Now, whether or not those people went out, maybe, but that does have me a little hesitant to add more if it gets down at 345. But let's see if that even happened in the first place. Because as of now, it's being very stubborn right here around, 344 or 345.25 does seem to be kind of that golden goose area. Which, as of now, holding stubborn, very stubbornly. Okay, getting some movement. This thing's got to get down below 345, though. It's knocking on the door a little bit. Does it want to fall is the question, though. Okay, there's the break. Getting hung up here a little bit in that 344.80s. So took out 200 shares there. Took out another 50 there. So still have 200 shares left. So this could still be, I suppose, a losing trade if this thing decides to really all of a sudden just bounce up big against me here. Okay, so now at this point, you saw that I have 200 shares left. Now you could be thinking, and rightfully so, Clay, you had the stock, it went in your favor quite a bit. Why not just take those 200 shares off? Make money on those too. But that's where the risk comes into play. And the risk here is you know what? Yeah, these 200 shares could ultimately end up losing me money, which can sound really bad, right? It can make you feel really bad because, again, and you're not being irrational. And this is why trading can be difficult because the emotions, they're out of whack. But I can see how you would be thinking, wait a second. You're telling me, Clay, that these 200 shares that could be making you money, are you saying me that they ultimately might lead to a case where they lose you money? That sounds really bad, doesn't it? That sounds super, super sketchy. That sounds like you're definitely doing something wrong where you could have shares that if you just took them out of the market right now, boom, you have that much more money in your pocket. But to sit there and say, but you're gonna risk having profits in your hand to potentially losing those profits, and then not only losing those profits, but then potentially having it lose you more money. Yeah, that's what I was willing to do. I was willing to get riskier. But as much as that sounds bad, as much as that makes you feel, whoa, I don't like that at all. That makes me feel very uncomfortable because you know what? Profit is profit. Green is green. You can't go broke taking a profit. All those cliche sayings that are false for what you're about to see why. No, sometimes you need to be riskier. Sometimes you need to hang on to something. And when are these times? Well, when you're already in the green to an extent and you're in a good high probability situation, to which I was. Now, if you're saying, well, Clay, what's a high probability situation? That's way more than a video, right? That's like an entire course of finding those situations. But if you know how to identify those and you know that you're in a high probability situation, well, here's where the math comes into play. Is at this point, yeah, with 200 left, I was still up $175. Right? So I already had that as a profit. So sure, these shares could have turned around and went against me. And sure, I could have watched the profits disappear and then lost money on those shares. But let's say that loss turned out to, let's just call it $200. I get it. Mentally speaking, wow, that means that your $175 that you were up, now from going from a $175 winning trade, now you're at a minus $25 losing trade. That's what I'm saying. But let's look at this from a risk versus reward standpoint. So in other words, at this point in time where I cut off the video, my risk was now, and I should say this $200 loss was like worst case scenario. My risk now was losing $25. My upside was a whole lot more than $25. So and again, this is also within the context of a high probability situation, which is why that part is key. So within a high probability situation, if I tell you, hey, you know what, you're risking $25 to make a whole lot more than $25, what would you think about that risk versus reward? So ignoring all this, if I just said, hey, you know what, ignore all that. Here's a trade, here's a strategy, here's a trade setup where your risk is $25, but you could be making 10 to 1, maybe 20 to 1. So 20 to 1, 10 to 1 risk versus reward. Would you take that? I hope you would say, yeah, that is a very good risk versus reward probability and ratio there. I would absolutely take that. Well, that's where I found myself in this situation where yes, it could. The green trade could have went red, which, feeling sounds so bad. Oh, that would be miserable. But looking at it from a logical, mathematic, probability standpoint, hey, risking $25 to make 10 to 1 ratio, 20 to 1 ratio, do you see why feelings can be really bad? Feelings can be very deceiving. So let's see how the rest of this trade went as I held on to those 200 shares. Very, very minimal losing trade. Yeah, I'm not even quite sure. I just can't do the math that well in my head. Again, I'm not sure if that's possible. If this goes up over 345.50, I will be out. So yeah, that would still be, should still be in the green there, because that would be a loss on the final 200 shares, but not by much. So yes, this will be a green trade, but now I'm in a great spot of just, okay, well, how much of a green trade is it going to be? And that's a good spot to be in as traders, right? So I am stressed out about this one, but my only stress is, well, how much money am I going to make here? And talk about a great stress to have. So if this goes up over 345.50, I will be out, which will cost me money on these last 200 shares. I will lose money on this final portion, but I'm willing to take the risk that I lose money on those, because what happens if this thing continues to bleed downwards? Well, then I'm going to be sitting here saying, well, I wish I still had 200 shares left. So to me, that's a risk worth taking, especially when I know that the overall trade will still be green. So 345.50 is a level that I'm watching. But ideally this thing continues to come on down. Which will put some more profits into my pocket. And loving this candle right here that's forming. But yeah, let's see if this thing, coming down to 344 would be fantastic, but step one is got to be, let's see, where's that stubborn level? Yeah, 344.30 we'll call it. Yes, no, zero stress right now. The only stress I have is, hey, how much money am I going to make on this thing? That's a good kind of stress to have. But yeah, can this thing, really 344.50 right now, it's kind of been that stubborn area. And as you can see here, it just does not want to quite surrender it. All right, well, I'm not going to sit here and make you watch all of this. So if it looks like I'm going to be getting stopped out, or if it looks like I'm going to take more profits because it starts to go in my favor, then I will get the video rolling at that point. Okay, it's nearing 344.50. So the level I'm watching right now, I want to see 344.50 disappear. There we go. It's disappeared. Now the question really becomes, okay, well, how far down is it going to disappear? Can I get some at 344? Can it break down through 344? It's close. Trying to give it that chance. There we go. So it took out another 25 there. Would really like to see this momentum kick into high gear here. Momentum to the downside, of course. Going to go ahead and take off another 25 there. So still have 150 shares left. I'd like to see this down below 343.50. It's definitely getting very volatile down here. So we're looking at either probably a good size bounce coming, or this thing's getting ready to really continue to plunge. There we go. Because I think it wants to continue to potentially plunge, that's why I'm letting it go down even further. Okay, good. Got even more than what I wanted on those ones. Let's see if we can get below 343 here. There we go. Amazing. There we go. Another 25 off. Even better. Now momentum's really kicking into high gear. There we go. Can we get the break at 342? How great would that be? $342 knocking on the door. Not sure if it's going to break, so I'm going to go ahead and take off another 25 there. So still have 50 left just in case. It does want to break down through there. But yeah, stubborn as would be expected. But that is exactly why I hung on to those 200 shares, for this reason right now. So still have 25 shares left, and I think it's bouncing here. And I am happy with that trade. So there we go, $621 on that trade. Pretty cool stuff, huh? So I mean, think about it. Risked the $25, and by willing to take on that risk, what did that ultimately lead to? That led to over a $600 win. I mean, that's pretty good risk versus reward. Risking 25 to make 600. It could have even been more than 600 had Facebook continued to work in my favor, but it didn't. But I like those numbers. I like that math. And yeah, there will be times where the $25 loss might happen, but it's not going to happen all the time. You know, it's not even going to happen most times. Why? Because if you're in a high probability situation, if you're in a situation where the odds, the favors, dynamics are in your favor, well then, like I said, assuming you've truly identified one of those areas, then that doesn't guarantee that it's going to work in your favor. But yeah, most times it's going to work in your favor. So don't let the thoughts of all these gains that you've already made potentially disappearing scare you out of what ultimately turned out to be a very, very solid win. So hopefully this helps. Hopefully this can just make you aware of some times where, yeah, you need to be risky as a trader. You need to get riskier, but the risk, again, is not real for all the reasons we just talked about. So again, if you want to help support the channel, claytrader.com/gear, get yourself a t-shirt. And if you enjoy videos like this where I take Blackboard lessons and then back them up with my personal trading, then make sure to hit that like button, leave a comment down below. Thanks for hanging out. Check out the channel as a whole. If you like what you see, then I'd love to have you as a subscriber. So hit that subscribe button. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.